Have you ever wondered what a bridging loan is and how it can be beneficial to real estate investors? Let's delve into that. Essentially, a bridging loan is a type of short-term financing that's designed to bridge the gap during periods of financial uncertainty. Picture this: you're a real estate investor, and you've found an exceptional property that's a potential gold mine. But there's a problem. Your funds are tied up in another investment, and you're unable to secure a long-term mortgage in time. This is where a bridging loan can swoop in to save the day. Bridging loans are unique in the world of finance. They're not like your traditional loans that span over several years. Instead, they're short-term, typically lasting anywhere from a few weeks to a couple of years. The idea is to provide quick access to funds, allowing borrowers to seize opportunities or navigate financial hurdles before securing a more permanent form of financing. Now you might be wondering, why not just wait until the long-term financing comes through? Well, sometimes time is of the essence. In the fast-paced world of real estate, opportunities can come and go in the blink of an eye. Waiting could mean missing out on a potentially lucrative deal, and that's precisely why bridging loans exist. But bridging loans are not just limited to real estate. They're versatile and can be used in a variety of situations, be it for a business needing to cover expenses while waiting for a major customer payment, or an individual needing funds to buy a new home before selling their current one. Bridging loans, as the name implies, act as a bridge, providing a financial lifeline during times when cash flow might be a bit strained. They're a powerful tool in the financial toolbox, especially for those who need to act swiftly in the face of uncertainty. Now that we comprehend what bridging loans are, let's delve into the benefits they offer. Bridging loans, like any financial product, come with their own set of advantages. One of the most significant advantages is the speed at which you can access funds. Traditional loans often involve a lengthy approval process, but with bridging loans, you can have the financing you need in your hands in as little as 24 hours. This rapid turnaround is a game changer, especially when you need to secure a property deal quickly. Flexibility is another key advantage of bridging loans. Unlike many other types of loans, there are no strict rules on how you use the funds. You can use them to purchase a new property, pay for essential repairs, or even to bridge the gap between selling one property and buying another. This flexibility lets you tailor the loan to your specific needs, allowing for a more bespoke financial solution. Furthermore, bridging loans can be a lifeline when it comes to securing a property deal quickly. In the fast-paced world of real estate, having the funds available to close a deal swiftly can be the difference between success and missed opportunities. Bridging loans give you the financial agility to act quickly and decisively, whether that's to secure your dream home or to snap up an investment property before someone else does. Additionally, if you're in the business of property refurbishment, bridging loans can be particularly beneficial. They enable you to start renovations immediately without the need to wait for long-term financing to be approved. This can significantly speed up the process, allowing you to complete the refurbishment and put the property back on the market sooner. In essence, bridging loans offer a fast, flexible solution for a range of property-related financial needs. They provide a valuable tool for seizing opportunities and overcoming financial hurdles in the property market. While these advantages make bridging loans appealing, it's equally important to understand the potential drawbacks. Every coin has two sides, and bridging loans are no exception. As we dive into the less glamorous side of bridging loans, it's crucial to remember that these fast, flexible financing options also come with their share of pitfalls. For starters, bridging loans often carry high interest rates. Because of the short-term nature and the risk involved, lenders tend to charge higher interest rates compared to more traditional long-term loans. Next on the list is the additional fees. Setting up a bridging loan can be a costly affair. Expenses such as legal fees, broker fees, valuation fees, and exit fees can quickly add up, making the loan significantly more expensive than initially anticipated. This is why it's so important to factor in all these costs before deciding whether a bridging loan is the right option for you. Perhaps the most critical disadvantage of a bridging loan, however, is the risk of losing your property. You see, bridging loans are often secured against a property. That means if you're unable to repay the loan within the agreed time frame, the lender has the right to take possession of your property to recover their money. This can be an extremely stressful situation, and one that you'd certainly want to avoid. And let's not forget the pressure of time. Bridging loans are designed to be short-term solutions. If you're unable to secure long-term financing or sell the property within the agreed loan term, you may find yourself in a tricky situation. having to repay the loan without the means to do so. Lastly, while bridging loans can provide much-needed cash in a pinch, they should not be viewed as a long-term solution. Relying on bridging loans for ongoing financial needs can lead to a cycle of debt that is hard to break free from. Understanding both the advantages and disadvantages of bridging loans aids in making an informed decision. It's all about weighing the pros and cons and determining whether the benefits outweigh the risks in your particular situation. You might be asking, when should I consider a bridging loan? Well, let's dive into some scenarios where a bridging loan could be a useful tool in your financial toolkit. Picture this. You're at a property auction and you've just won the bid for a dream property. But there's a catch. You need to secure the funds within a tight time frame, something traditional lenders might not be able to accommodate. This is where a bridging loan can step in, providing the necessary funds swiftly, allowing you to seize the opportunity. Now, imagine a different scenario. You've got a property that's seen better days and needs some TLC before it can be sold. You're confident that with the right renovations, you can significantly boost the property's value. However, you're short on funds to finance these improvements. Again, a bridging loan can come to your rescue, providing the necessary capital to refurbish and enhance your property, potentially leading to a higher selling price. And finally, let's consider a common situation. You found your dream home and you're eager to move in. But there's a snag. You still haven't sold your current home. You're stuck in a property chain and you don't want to miss out on your dream home. This is another instance where a bridging loan can be a lifesaver, bridging the gap between buying your new home and selling your old one. But remember, while bridging loans can be incredibly useful in these scenarios, they are not a one-size-fits-all solution. They come with higher interest rates and fees compared to traditional loans and should be used judiciously. It's crucial to have a clear exit strategy to repay the loan, whether that's through the sale of a property or securing a traditional mortgage. Bridging loans offer a solution in these scenarios, but remember, they are not without risk. So always make sure to do your research, consider your options, and consult with a financial advisor before taking the leap. So, are bridging loans the right option for you? We've journeyed through the world of bridging loans, understanding what they are, their benefits and drawbacks, and when one might consider opting for them. Let's take a brief stroll down memory lane to summarize what we've learned. Bridging loans, as we've discovered, are short-term financial solutions primarily used in real estate transactions to bridge the gap between the purchase of a new property and the sale of an existing one. They're the sprinters in the marathon of loans, helping you cross the finish line when time is of the essence. We've also delved into the advantages of bridging loans. They offer quick access to funds, are flexible in terms of repayment, and can be a real lifesaver when you're in a tight spot and need to secure a property quickly. They're like that reliable friend who always comes through when you're in a pinch. However, every coin has two sides, and bridging loans are no exception. We've talked about their disadvantages as well. They come with high interest rates and fees, and there's the risk of losing your property if you fail to sell your existing one in time, or if you can't keep up with the repayments. It's like walking on a tightrope. You need to balance carefully to reach the other side safely. So, when should you consider a bridging loan? It can be a viable option if you're confident you can sell your existing property swiftly, or you have a solid plan to repay the loan. It's a tool, a powerful one, but it's not for everyone or for every situation. It's like a high-performance sports car, thrilling and powerful, but you need the right skills and circumstances to handle it safely. Ultimately, it's crucial to weigh the pros and cons before deciding to opt for a bridging loan. It's not a decision to be taken lightly or without thorough research. Remember, financial decisions should always be made with caution and thorough research. Thanks for watching, and stay tuned for more insightful videos.